Divorce changes your financial picture, but it does not end your ability to buy a home. Here is what lenders need to see. First, your divorce decree or marital settlement agreement needs to be finalized. Lenders cannot work with a pending divorce. They need to see the final terms in writing. If there is an existing mortgage on the former marital home, that matters. If your name is still on it, it counts as your debt unless your ex has refinanced into their name only. Get that resolved before you apply. Alimony and child support cut both ways. If you receive it, most lenders will count it as qualifying income as long as it has been documented for at least 6 months and will continue for at least 3 more years. If you pay it, that payment counts against your debt-to-income ratio. Credit is another factor. Joint accounts from your marriage show on your credit report. Make sure you know where your score stands before you apply. Here is the good news. If you are buying on your own after a divorce, you only need to qualify on your income. FHA, Virginia, and conventional loans are all available to you. And in Solano County right now, you can find quality homes that are affordable on a single income. I help people rebuild after life changes like this. At Stacey Solutions, I walk with you through the entire process and find the right program for your new chapter. Book a free buyer consultation. The link is in the description.